Hello friends, I welcome you all to another edition of Daily News Analysis. So in this particular edition, we are going to discuss some very important articles that are part of obviously the Hindu and as well as Indian Express newspapers. So let's start. The article listing you can see clearly on the screen here. The first article, very vital from the perspective of GS3 economy, is GDP growth estimates for FY26 expected at 7.4% despite US tariff troubles. This is very major news considering the upcoming budget session. We are going to see a lot more discussions vis-a-vis say economy in the upcoming times. But this particular news, now the estimate part is very vital. See, in the upcoming times, you will hear a lot about say base change, base year change, and due to that, these whole estimates will change again. But from the perspective of say GS3 economy, this particular article now is very important. Particularly considering the US has imposed so high tariffs on India, this particular news presents very optimistic picture of our economy. So very important article, stay tuned. Some very basic terms and terminologies we are also going to see in this particular article, because in economy, particularly in prelims, you may get such type of questions as well. Say for that matter, nominal GDP, how it is different from say real GDP. Although when you think about it, in general, these are very basic concepts, but in exam environment, you may not able to get the correct answer to such questions if you are not clear on the concept part. So conceptual clarity is very vital in such questions on economy. The next important article is about why silver prices jumped 160% in 2025. Very interesting and important analysis here in the Indian Express. Another important article is about India's progress on its climate targets. Again, very vital article in the Hindu from the perspective of GS3 environment. That is vital. The update regarding census is also very vital in the Indian Express newspaper. Census houses listing from April with option for self-enumeration. Self-enumeration option will be there, so you do not have to worry about say people or that census enumerators coming to your house. See, this is going to be a digital census. You can self-enumerate yourself 15 days before the actual visit of such enumerators to your house. So to certain extent, the process will become much more smoother, because this will be our first digital census in 2027. The notification has been issued by rescinding the notification that was issued in 2019 for 2020 census, and its deferment to 2021. So particularly very vital news from the perspective of say census and related updates. So important from the perspective of prelims. And another important article is about fine tuning the signal to sharpen India's AMR battle. So AMR, antimicrobial resistance. See, this is the very growing health hazard for India, particularly from the perspective of GS2 health. This particular analysis is very vital from the perspective of prelims as well as mains. For particularly in prelims, you may get a question on say the policies that are there at India at the level of say central government and at say WHO level, international policies, what to tackle AMR. So important analysis. So in recent times, our Prime Minister through his Mann Ki Baat has discussed a lot about say antimicrobial resistance. So this particular article analysis here is very vital in that regard. So let's talk about the first article. So very optimistic projections have been there about our FY26 GDP estimates, 7.4% despite US tariff troubles. So very optimistic news particularly here. So first advance estimates ahead of the union budget has been revealed the stunning growth figures. The GDP growth in FY26 is expected at 7.4% despite US tariffs. So particularly this particular GDP growth number is on the back of strong manufacturing particularly sector growth. Manufacturing sector growth is very strong, and that has pushed the data of say this particular GDP growth to this particular territory, 7.4%. But on the other hand, the nominal GDP growth will be at 5-year low of 8%. So nominal GDP will be 5-year low of 8%. So that is also very interesting. See, you can clearly see there is not much of a difference between real GDP, GDP growth projections and real GDP growth projections and nominal GDP growth projections. So what it indicates is the moderation in, say, the inflation figures. Okay, so this particular observation is very vital. Why? Nominal GDP essentially includes inflation, while real GDP actually excludes the uh, uh, particularly the GDP number. So essentially the impact of inflation will be visible in real GDP figures, but it will not be visible in nominal GDP, okay, because in nominal GDP it is the overall including the inflation figures that we actually measure the overall GDP projections, but in real GDP we exclude actually uh, the inflation figure from, say, the nominal GDP. So if you exclude inflation from, say, nominal GDP, you will get real GDP. You are getting my point rightly. So that is also very vital here. So India's real GDP growth is expected to rise sharply to 7.4% in the current fiscal, according to the government's first advance estimates to the number, on the back of the sharp rebound in manufacturing sector. As I said, manufacturing is seeing the heydays again. So that's why 7.4% real GDP growth figures have been estimated growth to 7% from 4.5% last year. So it is a stunning growth, particularly in manufacturing sector. See, last year we have the manufacturing particularly growth at a tepid 4.5% for a whole year, but this fiscal year we have particularly jumped vis-a-vis manufacturing sector growth to 7% despite problems caused by the 50% US tariffs on Indian goods. So definitely tariff has put in the impact, and there are estimates that in the upcoming GDP projections we are going to see some impact of tariff, but currently the first estimate shows that despite the tariff troubles, India's GDP growth is robust. According to data released by the Ministry of Statistics and Program Implementation, MOSPI. See, another important part here to understand is GDP figures are released by MOSPI, Ministry of Statistics and Program Implementation, and not RBI or nor other labor bureau or something like that. Remember that Ministry of Statistics and Program Implementation actually releases these figures, while the real GDP growth is projected to rise from 6.5% in 24-25. Nominal GDP growth without adjusting for prices increase, that is inflation, is set to fall to a 5-year low of just 8% as well. So what it indicates is essentially moderation in inflation figures. So that's why the nominal GDP number will be a key input in calculations for the upcoming budget for 26-27, especially for the tabulating the growth in the tax collections as well. So many times for GDP projections particularly, the nominal GDP growth figures are very vital. So tax collections and all those things, see, most of the time budget estimates and all those figures in budget on which we built our whole projections for our economy depend a lot on nominal GDP figures. So that's why actually understanding and measuring the right GDP growth is very vital, and that's why to actually account for the right increase in the GDP growth, we have shifted essentially to new GDP particularly new GDP outlines in the upcoming times. For example, for that matter, the base year will be changed. So base year will be changed to 22-23 in the upcoming times, and see, until these figures are based on the base year 2011-12. So 2011-12, so these particular figures may not give the right picture of the economy. So that's why base year change is something very vital now, and new GDP figures will be there in the coming times, that will be based on 22-23 base year, okay, and it will again give us a better picture of our economy. Particularly the last time India's nominal GDP growth was lower was in the pandemic year of 2020-21, when the economy had contracted by 1.2%. In rupee terms, the nominal GDP in 25-26 is seen at rupees 357 lakh crores using the exchange rate of 89.989 per US dollar that the rupee closed Wednesday. The GDP amounts to 3.97, approximately $4 trillion. So there is recent news that India has become essentially the fourth largest economy in the world. Okay, so very important update here vis-a-vis the GDP figures. So particularly the nominal versus real GDP growth outlook, you can clearly see for 26-27 nominal and real GDP are expected to flip. Okay, nominal GDP growth at 10.5 to 11%, close to the long term average, while real GDP will be at 6.7%. So in the next fiscal, we expect these figures to flip vis-a-vis nominal and real GDP. So we are optimistic that our economy will grow in the upcoming fiscal year as well. Role of first advance estimate in budgeting. So this is also something very important from the perspective of budget and budgeting session in the upcoming times. The first advance estimate of GDP is crucial for the union budget, usually presented on February 1. The Ministry of Finance uses this estimate. This particular point is very important here. The Ministry of Finance uses this estimate to assume a nominal GDP growth rate for the next fiscal year, which guides expected tax revenue growth and fiscal deficit and debt to GDP targets as well. So expressed as percentage of GDP. So nominal GDP figures and related estimates are very vital for, say, the preparation of budget in. So that's why why particularly these estimates are vital, because we actually calculate the expected tax revenue growth and fiscal deficit and debt to GDP ratios for, say, the requirement of FRBM. All are essentially based on, say, nominal GDP estimates that we are going to use for the upcoming FY26 year. So the estimates are very vital. Budget assumptions versus actuals 25-26 case has been given in the article. In 25-26 union budget assumed a nominal GDP growth of 10.1% over the first advance estimates for 24-25 to set the fiscal deficit target at 4.4% of the GDP. So this particular point is very vital here. Why the advance estimates are very important. Last year, based on, say, the GDP figures released in 24-25 for the estimates for 25-26, the fiscal deficit was set at 4.4% of GDP. However, there are difference between the actual figures and the nominal one and the estimated ones. The actual nominal GDP growth, first advance estimate 25-26, 8% lower than assumed. Despite this, the absolute GDP size target was met at 357 lakh crore due to upward revisions in the previous year's GDP. So these are some numbers game that the government plays most of the time, because these estimates may change. See, most of the time, as I earlier said, the new GDP series will come. So that will also change these estimates. So essentially, the government has to account for the changes. These are not the final figures. These are estimated figures. So on these estimates, we are basing the next year's projections in the budget particular. So they may change. The actual figure may be different. That's the case. So let's see. Let's hope the difference between the real and actual will be less this time. New GDP series and base year change. As I earlier said, we are going to change a base year to 22-23 against 2011-12. The first advance estimate for 25-26 will have an unusually short shelf life. Obviously, why? From February 26-27, all GDP data released by Ministry of Statistics and Program Implementation will follow a new GDP series. So what is this new GDP series? We have base year change from 2011-12 to 22-23 and incorporates new data sources and methodological improvements on the lines of global standards essentially. So MOSPI cautioned that advanced and quarterly estimates will undergo revisions due to changes and users should interpret revised estimates with care. So that's the statements these are the statements of MOSPI itself. So take these figures with the pinch of salt. That's the case, because new GDP series will come from February 27 and they will, and the upcoming figures will be based on that particular series. So the figures may change. MOSPI will release. So what the MOSPI will release? GDP data for October, December 25 under the new series, second advance estimates for 25-26, revised GDP data for the last 3 years under the new base year. So these figures are very, very vital. Remember that. So all these figures MOSPI will release after, say, the revisions in base year and all those reforms in the new GDP series. Under the current 2011-12 base series, real GDP growth stands at, let's look at the real GDP growths for the last 3 years. 22-23 7.6%, 23-24 at 9.2%, and 24-25 again at 6.5%. So some fluctuations in the real GDP growth figures you can clearly see, and this is based on 2011-12 base year series. And you know, as I said, there will be revisions by the MOSPI in the upcoming times as well. Revision timeline for 25-26 important, just go through it. Signs of second half growth slowdown. So this particular part is also very, very vital. The first advance estimate suggests a second half slowdown. So obviously, you know, it will be an extended impact of, say, Trump's tariffs. So October, December 25 and Jan, March 26, average growth 6.9%. This compares with 7.8% and 8.2% in first 2 quarters. So definitely, you know, we are going to see the impact in the upcoming time of, say, Trump's tariffs. Reserve Bank of India forecast 7% growth in October, December 25, 6.5% growth in Jan, March 26 as well. So essentially, the growth slowdown little bit, you know, it will definitely have an impact. Government's growth assessment is very optimistic. Particularly after stronger than expected Q2 growth of 8.2%. So this is also very surprising figure at that point of time. Particularly the chief economic advisor stated that full year growth would be north of 7%. So this is very, very positive, net positive for our economy, that the yearly growth will be north of 7%. Basic terms and some meanings has been given, nominal GDP and all those things. Okay. So real GDP is there. Base effect. See, the base year will change. So base effect is something very, very important. There are types of base effect as well. Low base effect, previous year had contraction slowdown, and you have high base effect as well. Just go through it. We're not that much, you know, difficult to understand. So this is high base effect. Previous year had strong growth. Current growth appears suppressed, common after boom years. So particularly not that much important. So this is very interesting and important practice question. Just comment your answer in the comment section to this particular question. See how many statements given above are correct. Look at the second statement. Only real GDP figures are used for the budget estimates, and nominal GDP figures are not at all considered in estimation of budget parameters. So I already mentioned, you know, in detail about the importance of nominal GDP figures for the estimates of budget. So you can clearly see whether second statement is correct or incorrect. Okay, very interesting and important question here. Just comment your answer in the comment section again. Let's look at the second article. Why the silver prices jumped 160% in 2025. So silver prices, the silver metal prices jumped almost 160% in 25. So we have, you know, focused too much on, say, gold rally. So in the recent times, in the recent months, we have all heard the news about, say, the rally in gold prices. So you must have seen that particular rally. But what is understated is the silver jump as well. So the jump in silver prices. So the analysis in this regard is vital. But apart from that, the silver and its importance in the current economy, particularly the AI driven demand that is there with vis-a-vis, say, the silver. And apart from that, very, very vital is to understand the resource, the geography, the world geography part associated with silver as well. So that part is also very, very important. You may get a direct question like this country is the largest producer of silver, and this country is the largest exporter of silver. Okay, such sort of statements will be there in prelims. So this particular article in that regard is very, very vital. So after 160 plus rise in 2025, the prices of silver has continued to surge this year, with the first week of 26 seeing an increase of more than 7%. So in 26 also the rally in prices of silver hasn't stopped. So it has kept on increasing. You can clearly see the prices of silver in this particular chart over the period of time, just from January 25 to January 1, 2026. So January 1, 25, so it is like this growth. So you can clearly see the increasing trajectory of, say, the prices in silver. Very, very important article here. The year 25 also witnessed record highs for gold prices that I just mentioned. Particularly, the reasons here are very, very vital. So gold prices, this was largely driven. So gold prices rally was largely driven by the investor confidence due to global trade tensions, by dented investor confidence. That is very true. Global trade tensions, essentially the Trump's tariff war and the tariff threats, geopolitical tensions that are clearly visible, and then particularly the reduced trust in US assets by the global investors actually dented the investor confidence, and that has pushed the gold rally further, because they invested in the safe asset, that is gold. Gold is always the safe asset most of the time, and obviously then you have continued easing of interest rate by US Fed. So this is also very, very important and interesting reason here. US Fed rate, particularly in the recent times, the Fed has actually reduced the rates. So but that rate reduction is not guaranteed in the upcoming times, and there are some estimations and there are some indications in that regard in the recent meeting of Fed. But again, we are going to see whether the Fed, under the Trump pressure, the Trump administration's pressure, further reduces the interest rate or not. But what all the indications are, they may now stop the reduction in rates. So let's see what happens. The reasons behind silver's rise are similar but also little bit different. Unlike gold, which is primarily purchased by households and central banks as a store of value and investment, silver has actually inherent physical properties that make it key component in the manufacturing of AI and related industries. So such as batteries and solar panels. So the manufacturing of batteries and solar panels, but in AI related developments also, like silver is a critical mineral. So apart from, say, other critical rare earth minerals, silver is very, very important. These sectors are not only vogue now, but will be crucial to the future of humanity. The bedrock of demand for silver has also included artificial intelligence. So as I said, AI has rallied as well. Artificial intelligence remains a powerful demand source for silver. Investment in AI related industries is increasing silver demand. So that is also the reason for, say, the increasing demand of silver. Investment levels lead us to view AI related silver demand as a growth source for next several years. So in the upcoming years, we will see rally in silver prices further because of AI led demand. Silver is also used to make jewelry and coins. So this component we cannot actually forget. Okay, so very, very vital component, jewelry and coins. We Indians also love silver. Silver, is considered a valuable metal for all households. That is why buyers and their reasons to purchase silver are more varied than those of golds. So gold is most of the time the sort of, because of its inherent value as a safe asset, is that particularly is pushing its rally. But silver has diverse demands, so that is pushing the rise further. Okay, so compared to gold, how the demand for silver is different, you understood just now. So remember that point. Okay, now another important reasons for, say, the rally in silver prices is the rivalry of US and China. This particular part we cannot actually ignore at all. Structural supply constraints in silver. Silver supply dynamics differ sharply from gold. It is primarily produced as a byproduct of the mining other than minerals. It limits the ability of supply to respond quickly to rising demand. So this is also very, very interesting and important component to understand about the mining of silver metal itself. See, it is considered as a byproduct rather than a main mining product itself. And despite strong and sustained demand from industrial uses, silver output has not increased proportionately for several years, creating a persistent supply side tightness. So that is also most of the time why the prices change is because supply side mismatch. Okay, that's the reason. So you have the increasing demand for silver, but the supply is not catching up or not matching up, and that is pushing up the prices. So apart from that, US policy shift and stockpiling pressures. So what the Trump administration is doing is to stockpile these very important metals. So as a counter to China, because see, China particularly is a critical mineral behemoth. So that's why to counter the Chinese dominance in critical minerals, US started stockpiling even the silver as well, and that has actually pushed the rally further. A key near-term driver of silver's price surge is addition to the US critical minerals list in November. So US actually added silver to the critical minerals list. Their critical minerals. We have our own critical mineral list, the 30 critical minerals, and US also has it in. And in November particularly, it included silver in it. The list revised every 3 years by the US Geological Survey influences the government financing decisions and determines which mineral may be reviewed under the Section 232 tariffs during the administration of Donald Trump. So particularly Trump administration is using this particular section effectively, Section 32, Section 232 of the tariff. Section 232 under the particular act, particularly the Donald Trump administration is reviewing the tariff decisions further. With silver included, the total number of critical minerals rose to 60. So we have 30 critical minerals. USGS, particularly US Geological Society, that is their survey that compiles these critical minerals, has compiled 60. USGS said the update followed a new methodology assessing economic impact of supply chain disruptions across 1200 plus scenarios. Even before this policy change, tariff fears had driven massive stockpiling. According to CME Group's commodity exchange, US silver inventory surged to 531 million ounces. So essentially, the Trump administration is trying to impose the tariff on the silver imports as well. So to a certain extent, considering this particular aspect, the users in US started stockpiling the silver. So, and that actually created the artificial demand supply mismatch as well. Those stocks have since fallen, they remain elevated at 449 million. So, see, earlier what happened is, due to the fear of Trump administration imposing tariff under Section 232 of the Tariff Act on the silver imports, the suppliers or say the importers started stockpiling this particular metal in the US. Okay, but after that, the US itself, the government itself, the Trump administration itself included it under the critical mineral list. Okay, and that actually pushed the rally further as well. So China's export restrictions and global industry concerns. So this also is news we have all seen that China tried to constrain the supply of critical minerals in recent times. Although it has opened up, the export restrictions have been put down by China to a certain extent. Adding to supply anxieties are China's new rare metals export restrictions effective for the next 2 years, which include silver. Although to a certain extent, China has budged from this particular restriction. In recent times, we have seen the relaxation in that regard for at least 6 months. These controls have heightened concerns among global manufacturers, and reflecting industry unease, Elon Musk, CEO of Tesla, warned on December 27 that such restrictions are problematic, noting that silver is essential for many industrial applications. Obviously, the Elon Musk also is worried because of the Chinese belligerence in the critical minerals, particularly the silver. Fear of missing out. See, most of the time, global supply disruptions and prices spike in London. Large-scale stockpiling of silver in the US led to supply mismatches in the key global market, particularly especially London. So where international silver prices are benchmarked. So London is very important, benchmarking, place. By October, around Diwali, a shortage of physical silver in London had emerged, triggering a sharp surge in global prices. This physical scarcity, rather than just paper trading, played a crucial role in the driving prices higher as well. So this is very short-term sort of reason for why during Diwali the prices changed drastically. drastically higher. India's investor frenzy and ETF driven demand. So this particular aspect is also very important. See, you may have been knowing this particular trend, silver ETF flows, okay, inflows, and gold ETF, silver and gold ETFs have seen the massive increase for adoption in Indian by Indian investors. So traditionally, India's global demand drives major price movements, but in 2025, silver was pulled ahead, okay, pulled into the save investment frenzy. According to the Bank of International Settlements, BIS particularly, the estimates, the retail trend chasing investors sought to capitalize on gold's momentum and extended speculative behavior to silver as well. So what happened is the ETF, the demand for ETF by say the speculative, particularly the speculative demand actually extended to silver as well, because the investors tried to capitalize on say speculative demand associated with gold, and they just carried it forward to silver as well, because essentially both are considered valuable metals in the case of Indian markets particularly, and Indians love silver as well, है ना? So a year earlier, silver ETF inflows were likely negligible, as Association of Mutual Funds did not even report them. So but in the ETF particularly, exchange traded funds ETF actually rallied for silver as well. We have silver ETF inflows. Noted that the gold and silver ETFs together accounted for 71.9% of the total passive fund flows, highlighting investors' growing preference for precious metals as portfolio diversifies amid global volatility. So in terms of global volatility, every investor wants to invest in the safe asset. So gold is considered a safe asset, but due to the rally in gold, the speculative demand for silver also increased in Indian markets, and even silver, traditionally we Indians consider silver as as an asset as well, asset of value. So but the gold prices and say the recent geopolitical tensions, the global volatilities associated with economy, with geoeconomics, the geopolitics part, further pushed this particular rally in the silver prices as well. So physical shortages, price premiums and fund pauses, you can clearly see rising prices, fear of missing out, higher investment demand and further price increases. This particular aspect is very, very important. Speculation is high, so investors cannot fear that they will miss out on say the rush, the silver rush, and they essentially they increase the demand, artificial demand, and it will further push the prices up. Due to acute shortages, domestic silver prices began trading at 5 to 12% premium over international benchmarks. So even at that point of time, the ETF led growth in the silver prices. Actually, there were some actually concerns that this particular demand this particular increase in silver prices is not sustainable, and they are actually overpaying their hand in general by rallying or pushing the silver prices to that extent, say compared to the say global level. So following these developments, silver ETF inflows moderated, declining to 3412 crore. So to certain extent there is a moderation in the ETF demand vis-a-vis silver. So we can see the moderation, but still the demand is high. The fear of missing out is something vis-a-vis Indian investor is there. Broad-based metals rally driven by tariff shortage and weak dollar. So this particular, all the commodity prices are on rise. So commodities in general are on rise because of say the metals rally driven by tariffs, geopolitical tensions, shortages and weak dollar. Particularly gold and silver were not alone in their rally. Copper prices have surged in recent times as well. So according to the momentum was a weakening US dollar, which is on track to end about 10% lower in 2025. So this is also a result of Trump administration's policies. So and the Fed rate and the associated volatility in that regard is also the reason. This environment fueled the so-called debasement trade, where investors buy real and scarce assets including gold, silver, Bitcoin and industrial metals, expecting them to retain value and hedge against currency depreciation. So gold is, silver is actually getting the same treatment as gold. okay, as a hedge against these sort of volatilities in the market. So that is also something important. Obviously, there is a bullish bias. The outlook is particularly positive for, say, the further increase in the silver prices due to these reasons. You can clearly see monetary policy easing, fiscal concern, geopolitical risk, and declining trust in US assets. So silver, this is some basic aspect of silver. Okay, just note down some of it. Silver chemical symbol Ag, silver का chemical symbol Ag है, atomic number 47, category it is a precious metal, shiny white, highly reflective, natural form you can clearly see, key physical and chemical properties, highest electrical conductivity of all metals. So this particular point is very important from the perspective of science and technology. Highest thermal conductivity, highest malleable and ductile, highly malleable, not highest, highly malleable and ductile, resistant to corrosion, melting point at 962 degrees Celsius. So if you want to melt silver, you have to go to 962 degrees Celsius. How silver is produced, some basic, as I said earlier, it is a byproduct of mining of copper, lead and zinc. Okay, major uses you can see: industrial, electronics, solar panels, medical instruments and antimicrobial coatings. AI is pushing the use further as well. Top silver producing countries, this particular part is very vital. So based on the recent global mining data, largest producer of silvers is surprisingly Mexico is the largest producer of silver. World's largest silver producer, major mining regions Zacatecas, Durango and Chihuahua. Strong production due to rich polymetallic deposits. Apart from that, China is a major producer. Apart from that, Peru, long history of silver mining, and Peru is also the largest. Peru also possesses largest known reserves of silver. That is also very important. Chile is there, and Australia is obviously very important producer as well. Silver reserves, country-wise estimates, top countries by silver reserves. Peru, largest known reserves. You have Australia, Poland, Russia, Mexico and global silver reserves at 5,30,000 estimated tons. And apart from that, in India particularly, India has limited primary silver reserves, is not mined independently. It occurs mainly as a byproduct of other lead, zinc ores. Major reserves are in Rajasthan though. Okay, accounts for over 90% of India's known silver resources associated with lead zinc belts. Zawar belt, Rampura, Agucha, Sindesar Khud, all located in Rajasthan. So Rajasthan is a major producer vis-a-vis India. So just comment your answer to this particular question. Very important and interesting question here. Okay. Next article, India's progress on its climate target. So this particular article is very important. So see, we have particularly the Panchamrit targets. Okay, but to just give you the latest when it comes to, say, climate change, the huge blow has been given by the Trump administration. The Trump administration has decided to withdraw US from, say, the basic treaty, the UNFCCC treaty of 1992, the Rio Earth Summit and all those things, the whole of the saga of, say, the climate summit and all those things that started from 1992 summit. US under Trump has withdrawn from that particular treaty itself. So very important, news. So that's why, particularly the news here and the news about where India stands when vis-a-vis, say, the completing the target associated with climate change is very vital. Okay, as I said, we have the Panchamrit goals, and we in the upcoming times we are optimistic of achieving our targets. The centerpiece of PM Modi's statement at the Paris summit was the pledge to reduce emission intensity by 33 to 35% by 2030 based on the 2005 baseline, coupled with commitments to enhance non-fossil fuel power capacity to 40%, 175 gigawatt of renewable energy and 2.5 to 3 billion tons of carbon sequestration through forest. Although we have, updated this to Panchamrit goal. Okay, so Panchamrit goal we all know. Okay, so now the thing is, we have now more than 10 years later, one needs to evaluate whether these targets have been achieved. So there has been updation vis-a-vis our targets. So in this regard, so focus on the Panchamrit goals. Okay, we all know what are those goals. So but before that, The article focuses a little bit more on, say, Paris Climate Agreement. That is also very, very fundamental agreement of 2015, very, very, revolutionary sort of treaty. So that in that particular treaty, there were always the focus is common but differentiated responsibilities, CBDR principles. So CBDR principles is upholded in that particular treaty to certain extent. Okay, it is considered a bedrock of, say, overall global climate commitments and climate summits. CBDR, common but differentiated responsibilities. Obviously, the historical emissions, if India doesn't historically meet these particularly carbon emissions, then it should have the potential to grow further by not stymieing from the historical emissions of other Western countries. So that's the case. So CBDR principles are very, very vital. Climate promises, you can clearly see some of the climate promises. Obviously, compared to, say, G20 peers, India is, India's emission commitments are on track. Okay. So decline in emission intensity, a policy achievement. India has achieved a significant reduction in GDP emissions intensity. What is emission intensity, by the way? Greenhouse gas emissions per unit of GDP, economic output. So emission intensity, the definition is very important from the perspective of prelims. You will get a direct question. What exactly is the emission intensity? Emission intensity is the greenhouse gas emissions per unit of economic output. It is not just CO2 emissions, remember that. All the greenhouse gas emissions per unit of GDP. That's what is called emission intensity. Using 2005 as the baseline, emission intensity fallen by 36% by 2020, allowing India to meet original 30 to 35% target by 2030 deadlines, almost a decade before. This performance places India among the faster improving economies globally. So we have achieved emission intensity target that we all know. Structural drivers behind intensity reduction. The three key structural factors explain India's key emission intensity reductions: energy transition, economic restructuring, and efficiency programs. So these are some of the reasons for, say, the emission intensity reduction, and we achieved that particular target due to energy transition, rapid expansion of non-fossil fuel production capacity. Okay, power production capacity, reduced the carbon intensity of electricity. Non-fossil capacity crossed 43% by 2030 and reached around 50% by mid-2025. Economic restructuring, the shift towards services and digital sectors which are less carbon intensive than manufacturing, lowered emissions per unit of GDP. So to certain extent, this particular point is debatable, but the article mentions it. That's why I have included. Efficiency programs like we have PAT, we have Ujala, so that curbed the energy demand growth, and not just reduced our, say, the energy budget, but it actually reduced the carbon emissions as well. Limits of intensity gains and the net zero challenge. Despite falling emissions intensity, absolute emissions remain high. So emission intensity to come ho gayi, but absolute emissions kept on increasing. India's territorial GHG emissions were about 2959 MTCO2 estimates in 2020, with levels staying elevated thereafter. This reflects partial decoupling. GDP growth has outpaced emissions as growth reducing intensity without causing an economy-wide decline in total emissions as well. Moreover, sectoral divergence persists, and while India's intensity decline outperforms G20 peers, coal's dominant role keeps per unit emissions still high. So still, we have the energy basket, that is energy basket dominated by coal, that is actually pushing our per unit emissions, per capita emissions higher as well. For India's 2070 net zero pledge, that this is the foremost highlight of our Panchamrit, by the way. So Panchamrit में ये target है 2070 net zero pledge to be credible. Remaining intensity gains must translate into absolute emission reduction, requiring a transparent coal phase down strategy and clear industrial decarbonization roadmaps. So we have all, if we want to achieve that 2070 net zero target, we have to have decarbonization pathway that is credible, that is based on not just on paper, but actually we need to have the generation gap needs to be reduced in that regard. Rapid expansion of renewable capacity led by solar. India has seen a dramatic scale up of renewable energy capacity, with non-fossil capacity rising from 29.5% in 2015 particularly to 51.4%. As I said earlier, solar power has driven the growth, expanding from 2.8 gigawatt in 2014. So you can see the absolute growth in solar power that we have achieved since last decade, from 2.8 gigawatt in 2014 to 111 gigawatt by mid 2025. So this is historic jump in solar power, aided by competitive tariffs and domestic photovoltaic manufacturing. So we have the robust, to certain extent, robust manufacturing capacity in solar panels, although China still dominates in that regard. But solar power is a success story. Definitely solar power is a success story. Wind power grew more moderately from 21 gigawatt to 51.3 gigawatt in the same period. As of June 25, non-fossil sources account for 51% of India's total installed capacity, led by solar. So that is also very important. And we have National Green Hydrogen Mission, and our focus hasn't moved away from, say, the installation of renewable energy sources. Capacity versus generation. Coal still dominates base load. As I earlier said, coal remain the dominant sort of source for energy. Coal-based thermal capacity remained 240 to 253 gigawatt in 25. More than 70% of India's electricity generation still comes from coal. So this is the concerning part here. The coal still dominates. That is the concerning part. Although we have the capacity, but actual generation of renewable energy is still very, very far behind compared to coal. Storage, grid constraint and path ahead. Particularly the grid constraints are very, very visible. The biggest bottleneck translating capacity into emission reduction is energy storage. So that is the problem. The Central Electricity Authority estimates requirement of 336 gigawatt hour of storage by 2930. But as of September, only 500 megawatt hour of battery storage is operational. So you can clearly see the scope of improvement when it vis-a-vis, say, battery storage capacity, and that is also creating an issue in the overall utilization of our renewable energy capacity. The government programs, National Solar Mission, Solar Park Scheme, Uday, PM Kusum and rooftop solar initiatives, PM Surya Ghar Yojana we have last year, have enabled additions of roughly 25 gigawatt renewable energy annually, yet execution challenges persist. While 500 gigawatt renewable ambition of 2030 is technically feasible, achieving sustained generation and real emission reductions will require rapid scaling of storage. So storage capacity needs to be improved. And our third target of forest carbon sink target, numerically within reach. We are numerically within reach. India's pledge to create an additional forest and tree carbon sink of 2.3 to 3 billion tons of CO2 equivalent by 2030 appears to be achievable on paper at least, because FSI, the Forest Survey of India State of Forest Report 2023, estimates a total carbon stock of 30.43 billion tons of CO2 estimates, representing increase of 2.29 billion tons over 2005 levels. This leaves only about 0.2 billion tons to be added by 2030. So satellite data shows the forest cover. You can clearly see the forest cover number here, not that much important. Measurement ambiguities and government gaps and ecological limits. So despite favorable numbers, the achievement is clouded in definitional elasticity. Particularly, we all knew the Aravali saga in recent times. So also the Forest Survey of India, see, the problem about counting the forest is it's a definition itself. So Forest Survey of India's definition of forest cover. So what's the definition of forest cover? Includes any land over 1 hectare with at least 10% canopy encompassing eucalyptus monoculture, mango and tea plantations and roadside trees, thereby blurring the line between natural forest and plantations. So any forest you can call a forest cover if over 1 hectare with at least 10% canopy. In 1 hectare you have 10% canopy, that is considered a forest. So even mango plantations, even tea plantations or eucalyptus trees in 1 hectare or something like that will be considered a part of forest cover, but they are not essentially natural forests. So they are just monocultures. So there are some gaps in that regard. Policy execution also shows friction. Under the Compensatory Campa Act of 2016, and 95,000 crore has been accumulated, but utilization is uneven. Delhi used only 23% of allocated funds between 2019-20. Underutilization of fund is again problem. Campa funds, the classic issue of not utilizing the funds properly. The Green India Mission relaunched in June 25 after a decade of moderate progress, aims to regenerate 5 million hectares. So we are also going to see whether Green India Mission is successful in increasing the forest cover or not. So greening, warming water stress are reducing net primary productivity and actual carbon assimilation, especially the western Ghats and northeast India. Particularly the productivity of forest itself is getting reduced. Consequently, while India is likely to meet forest sink target of by 2030, it may do so through plantation heavy approaches. So we will achieve, we may be able to achieve our 2030 targets of say plantations or forest cover, but our approach is not the preservation or further increase in natural forests, but a plantation heavy approach, and that is concerning news as well. So road ahead is simple. We have to focus on emission intensity, which has declined, yet absolute greenhouse gas emissions continue to rise, and despite large renewable capacity additions, electricity generations remain dominated by coal, limiting real ecological gains. So priority areas included rapid scaling of battery storage. So this particular part is important. Rapid scaling of battery storage for the next 5 years constitute a critical window to accelerate renewable energy deployment, resolve storage constraints, and improve coordination, grid connectivity, and land acquisition. Ultimately, see, land acquisition is also a problem vis-a-vis say production of renewable energy. So that we have to take care of as well. So that ultimately, while India has largely met its quantified commitments, meaningful climate success depends on translating capacity into sustained clean generation and converting intensity gains into genuine moderation of absolute emissions beyond headline indicators. So that is very, very important. This is very simple question, just comment to answer in the comment section. The next important article is about census, the census update. So what has happened is the census house listing from April 1 with option for self-enumeration. So self-enumeration is something very, very interesting and important here. The Ministry of Home Affairs, which is nodal authority in that regard, notified the commencement of house listing operations for the Census of India 2027 to be conducted between April 1 and September 30, 2026. So house listing first happened, and then we have the census process starting across all states and UTs. Each state and UT will carry out the exercise during a 30-day window within this period according to notification by the Office of the Registrar General of India RGI. Census 2027 will be India's first digital census. So with enumerators using apps. So this is also something important and interesting and revolutionary, by the way. The new notification introduction of self-enumeration. So this self-enumeration is something very, very important that is a result of say digital census, it being the digital census. A major departure from past exercises, introduction of the self-enumeration allowing households to submit their details digitally during a 15-day window prior to the houses to houses listing by census enumerators. The government has issued a fresh notification under section 3 and 17A of the Census Act of 19. So this is also the basic act about the legal basis of Census of India, that is Census Act of 1948. Okay, it will have a phased census schedule, and reference dates are there. You can clearly see the update in that regard. Like reference date is obviously the March 1, 2027 for most of India, while snowbound remote regions such as Ladakh and Jammu and Kashmir, Himachal Pradesh, Uttarakhand, it will be October 1. So something important and interesting. Political significance and expanded data collection. It will help in the caste census as well. The updated schedule will have 34 columns, introducing new questions that reflect changes in the living standards and technology use, including a new question on the type of cereal consumed by household. So it will actually, show us little bit behavioral aspect of our population as well, and that will help us a lot in understanding the health aspects perfectly. So the census, it is a 10-yearly census that we have. Legal basis, you can clearly see the Census Act of 1948 is the legal basis, administered by the Office of the Registrar General and Census Commissioner of India, ensures confidentiality of individual information. Data cannot be used for legal or tax purposes. So this is also something interesting and important. Ministry of Home Affairs is the key nodal ministry as well. Key features of India's census: universal coverage, simultaneous nationwide operations, self-enumeration digital option introduced for the upcoming census for the first time, very historically included caste data, full enumeration last done in 1931 apart from SC/ST. So, the caste census will be for the first time since that time period. So, very interesting and important. This is practice question for you. Just comment your answer in the comment section. The next important article is about fine-tuning this signal to sharpen India's AMR battle. So, AMR, antimicrobial resistance. In the recent times, we have all seen the Prime Minister in his Mann Ki Baat highlighting this particular issue vis-a-vis India, the antimicrobial resistance. So, what has happened now, doctors feel that it might well be the one fail safe to stop in its track, what could easily be the biggest emerging health crisis. That is true, very true. It is the biggest emerging health crisis of India. So, this particular description is very, very vital here. Quoting from the Indian Council of Medical Research data set, Prime Minister mentioned that antibiotics are proving to be less effective against pneumonia and urinary tract infections. He went on to hit at the heart of the AMR crisis in India. Thoughtless and indiscriminate use of antibiotics by people. So, he highlighted this particular aspect very, very clearly, that AMR is increasing in Indian population. Why? Because of the thoughtless and indiscriminate use of antibiotics by the people. So, he clearly, our Prime Minister mentioned that people have started believing that popping up a pill will solve everything, but it is because of this that diseases and infections are overpowering antibiotics. So, this particular argument given by Prime Minister is very, very important. Many times we ignore this crisis in the belief that we always get the higher dose of antibiotics, okay. But sometimes if the basic antibiotics are not working for the simplest of the bacterial or say viral infections, the problem is there. The problem is there in our habit of using the or overuse of the antimicrobials. Particularly, he ended with a piece of advice that his listeners and followers will do well to religiously practice. Avoid taking medicines by yourself, particularly antibiotics. So, just go to the doctor and get a prescribed medicine and complete the course. That is what our Prime Minister has tried to say here, okay. So, AMR and importance of public awareness. Obviously, what it will create, the Prime Minister's insistence, it will create the public awareness. He is giving the push for the public education in that regard, which is very, very vital. Antimicrobial resistance in India is driven primarily by the irrational use of antibiotics. Until recently, AMR largely remained concern confined to infectious disease experts, hospitals and policy circles, but this has changed because of our Prime Minister's, Prime Ministers making it publicly mainstream topic. By citing national data and directly urging citizens to avoid over-the-counter antibiotic use, the Prime Minister translated the technical laboratory-based warnings into a nationwide public call to action. So, this is also very, very important. See, our Prime Minister is a good communicator, be a good public communicator, and if he is highlighting this particular issue, people take him seriously. So, this approach is expected to have a broader impact than earlier interventions such as National Action Plan on Antimicrobial Resistance or ban on colistin as a growth hormone. Particularly, colistin was banned. It was used such a high doses. It was used in poultries and food producing animals that the government has to ban the use of colistin in poultry because it is giving rise to the antimicrobial resistance. Public awareness therefore becomes a decisive factor in the determining whether AMR trends worsen in the upcoming times for India. Need for One Health approach. So, always the solution suggested is a One Health. So, what is One Health? That we consider environmental health, human health and animal health as a integrated approach that recognizes the interconnectedness between the all three, human, animal and environmental health. Addressing AMR effectively now demands coordinated solutions and this One Health approach, that we take care of our surrounding as well as wildlife. Gaps in surveillance and urban bias. So, what the article argues here is most of the time what is ignored part is the semi-urban and rural areas vis-a-vis say surveillance part. Most surveillance sites are concentrated in urban areas and tertiary care hospitals, which may inflate resistance averages while excluding large non-urban populations. Experts stress that urgent need to expand surveillance into secondary and primary healthcare centers to accurately assess community prevalence of AMR is very, very vital. Status of India's AMR surveillance network. So India has, AMR surveillance network, like National AMR Surveillance Network, and NARS-NET is there, established in 2013, currently includes 16 Sentinel Medical College laboratories and feeds into the World Health Organization's GLASS, Global Antimicrobial Resistance and Use Surveillance System. So this, GLASS system is very, very vital, very important. Remember this particular aspect, prelims ke liye important. However, for the latest GLASS report, January to December 23, data were drawn from only 41 sites across 31 states and union territories. So that, the NARS-NET that is feeding into the GLASS system is also has limited sort of collection of data points. These and that is also creating a problem that it may not give the right picture. These laboratories, primarily government medical colleges, track resistance patterns in 9 priority bacterial pathogens of public health importance. So very, very important. Call to broaden data sources and included it. See that NARS-NET, as I said, just laboratories at certain urban centers, and it will essentially ignore the semi-rural, semi-urban and rural populations. So it may not give the right picture of, say, the antimicrobial crisis in our populations. In a letter to the National Center for Disease Control, the Chennai Declaration on AMR emphasized that credible national data must include secondary, primary and private healthcare facilities as well. So private healthcare facilities are also pretty much, not included in the measurement part of such, surveillance part particularly. Inclusion of private hospitals, he noted, would yield a more balanced and representative national resistance. Another important part is Chennai Declaration associated with AMR. So Chennai Declaration, AMR, this particular point here is very important from the perspective of prelims. Remember that. Way forward, awareness plus systemic action. So this is what the article suggests. The WHO Global Action Plan on AMR 2015. So WHO's Global Action Plan on AMR is also there for 2015. Outlines 5 priorities. So what are those 5 priorities? Awareness, surveillance and research, infection prevention, optimal microbial use, antimicrobial use, sustained investment in new medicines, diagnostics and vaccines. So this is what the focus should be. While the Prime Minister's intervention strengthens the awareness pillar, the article underscores that expanding and strengthening AMR surveillance now requires financial investment, clear strategies, monitoring, enforcement and strong political will. Without these systemic efforts, awareness alone will not be enough to curb India's growing AMR challenge. So very, very important article here. The GLASS, World Health Organization's Global Antimicrobial Resistance and Use System. This particular surveillance system is also important. GLASS system of WHO is associated with AMR. Remember that. Very important from the perspective of prelims. Global platform launched in 2015. So in 2015 itself, the WHO launched this particular surveillance platform. Okay, its core aim is to generate comparable high quality national and global data to guide policy. Remember that. Key objectives you can clearly see, not that much important. What does the GLASS monitor? Antimicrobial resistance, antimicrobial use, epidemiological context. It covers infections such as bloodstream infections, urinary tract and gastrointestinal as well. How GLASS works? Obviously, the data is fed by the nations itself. Okay, the countries that feed the data. India and GLASS, the collaboration is there, as I earlier said. Why GLASS is important? AMR is a global health security threat. So AMR is not just, public health security issue in India. It is a global public health security problem that crosses borders. Without standardized surveillance resistance, trends remain fragmented and unreliable. GLASS supports the WHO Global Action Plan on AMR and national strategies like India's National Action Plan on AMR as well. So this particular aspect of surveillance is very, very important. Limitations and challenges are still there. Okay, this is very important practice question. So very, very important, public health hazard and the highlighting of this particular public health hazard by our Prime Minister has again reignited the debate surrounding the AMR in India. And from the perspective of prelims, you must know some policies, the Indian policies, the global WHO policies associated with AMR. Okay, and the cholesterol use is something very, very important, and it's banned in recent times in poultry, particularly important update. Okay, So that's it from my side, and stay tuned for another edition of Daily News Analysis. Thank you.